Welcome back, everybody. Today we're going deep on semiconductors.
Ooh, fun.
Yeah, should be interesting.
For sure.
You sent over the fact sheet for the iShares Semiconductor ETF,
SOXX.
SOXX. You looking to add some chip power to your portfolio?
Well, gotta keep an eye on these tiny but mighty components that are in practically everything these days.
Right. It's incredible how much impact they have.
Totally. And it's not just smartphones anymore.
No, not.
I mean, they're in everything from cars to healthcare.
Even to like the internet, like the actual infrastructure.
Yeah, the internet itself relies on them.
So to kind of break down this SOXX ETF, it's basically a basket of stocks, right?
That's right.
All focused on companies in the semiconductor world.
Yep. Instead of picking individual companies with SOXX, you can invest in the growth of the whole U.S. semiconductor sector.
Okay, so that makes a lot of sense, especially with how complex that industry is.
Definitely.
And the fact sheet mentions SOXX aims to mirror the NYSE Semiconductor Index.
Mm-hmm.
So if that index is doing well,
SOXX should too.
SOXX should too, so they're very much tied together.
Precisely, and that index covers a lot of ground.
Does it?
From design and manufacturing to distribution, all kinds of companies.
Wow, so it's diversified even within just the semiconductor industry.
Exactly.
Okay, and then another thing that stood out in the fact sheet was that hypothetical $10,000 investment.
Yeah.
Growing like crazy since SOXX started back in 2001.
It's impressive.
Really impressive, but I'm guessing that's not the whole story, right?
Of course not. Past performance never guarantees future results.
Right.
But it does tell us something.
What's that?
It shows how SOXX has handled different market conditions over time.
Oh, okay, that makes sense.
And what's really fascinating is how SOXX's growth mirrors our increasing reliance on semiconductors.
Oh, interesting.
Think about it. Back in 2001, smartphones weren't even really a thing.
That's true.
Now they're basically an extra limb, and that's just one example.
Right, right.
We depend on this tech so much.
I actually hadn't thought about it like that. How much our daily lives are tied to the performance of these companies.
It's true.
So, who are these companies in SOXX?
Yeah.
Any big names we might recognize?
Definitely, you'll see companies like AMD, Broadcom, Nvidia, Qualcomm.
Okay, yeah, those ring a bell.
The chips that power our computers, gaming consoles, even the data centers behind AI.
Wow.
All those big players make up over 58% of SOXX's holdings.
That's a big chunk of the fund.
It is.
And the fact sheet also talks about sector weighting, almost 79% in semiconductors and another 20% in equipment.
Right. So they're really focused on this specific sector.
Doubling down.
You could say that. And that focused approach can lead to big gains if the sector does well.
Okay, makes sense.
But it also means higher volatility.
Higher volatility, okay.
Think of it as a high growth, high potential, but potentially bumpy ride.
A roller coaster for my portfolio.
Exactly.
Got it. And speaking of volatility, the fact sheet mentions a beta of 1.6 year. So if I'm understanding beta correctly, that means SOXX is likely to swing more dramatically than the overall market?
You got it.
Okay.
If the S&P 500 goes up 1%, SOXX might jump 1.6%.
Oh, wow.
But on the flip side, if the market dips, SOXX could fall even further.
Oh, so it's higher risk?
It can be. It really depends on your risk tolerance.
For sure, for sure.
You know how much risk you're comfortable with.
Totally. And the fact sheet also includes things like standard deviation, price to earnings, PE, and price to book, PB.
Yeah. Right.
We're getting a little into the weeds here, I feel.
A bit.
But can you help connect those back to what they actually mean for someone considering SOXX?
Absolutely. These metrics give us different ways to evaluate SOXX and the companies it holds.
Got it.
For example, standard deviation tells us how much SOXX's price has fluctuated in the past.
Oh, so it's a way to quantify that roller coaster ride.
Exactly. The higher the standard deviation, the wilder the ride.
It makes sense. What about the PE ratio?
The PE ratio tells us how much investors are willing to pay for every dollar of earnings. Okay.
From the companies in SOXX.
Okay.
A high PE ratio could mean investors are betting on big future growth.
So it's not just about how it's doing now, but how it's expected to do in the future.
Exactly. It's about expectations.
Interesting.
And then there's the price to book ratio.
Price to book. Oh.
That's like comparing SOXX's market value to the actual value of its company's assets.
No. Okay, so like what they own.
Right. A low PB ratio might suggest that SOXX is undervalued.
Oh.
Compared to what its companies actually own.
Interesting. Okay.
So these ratios give us a more detailed view.
More than just past performance.
Exactly. And they can help you decide if SOXX fits your investment goals and your risk appetite.
For sure. For sure. And no one likes hidden fees.
Nope.
So let's talk about the expense ratio.
Right.
The fact sheet says 0.35%.
Mm-hmm.
Is that considered high?
That's actually pretty low, especially compared to actively managed funds.
Oh, okay.
It covers things like management fees and administrative costs.
So basically the cost of running SOXX.
Okay, so a small price to pay for access to all these semiconductor giants.
You could say that. And remember, lower fees mean more potential returns for you.
Yeah, that makes a lot of sense. And something else that I noticed, SOXX has an MSCI ESG fund rating of AA.
Yes.
So does that mean the companies in SOXX are considered like good actors
It does.
when it comes to those environmental, social, and governance factors?
That AA rating means that compared to other companies in their industry, the companies in SOXX generally have strong ESG practices in place.
Okay, so not specifically a green investment,
Not exclusively, no.
but it's a good indicator that SOXX is considering those things.
Absolutely. It's another piece of the puzzle when you're evaluating SOXX.
Right.
And deciding if it aligns with your values as an investor.
Okay, that makes sense.
Gives you a more complete picture.
So we've covered a lot of ground,
We have.
from understanding what SOXX is, how it performed,
Uh-huh.
to all those ratios, and even its sustainability rating.
It's a lot to take in.
It is.
But it's important.
So what are some of the key takeaways you think our listeners should keep in mind?
Well, first, I think it's important to remember that SOXX offers a way to invest in the growth of the semiconductor industry,
Right.
which is becoming more and more essential to our lives and the global economy.
It's true.
But it's also important to keep in mind that this type of investment comes with higher volatility.
Okay. Yeah, that's important to consider.
Definitely. And using those metrics we talked about, like beta and standard deviation and the PE ratio,
Right.
can help you figure out if SOXX is a good fit for your risk tolerance.
Right. Risk tolerance is key.
And your investment goals.
Yeah, and I guess also your values too, right?
Definitely. While SOXX isn't specifically an ESG-focused fund, its high rating is a good sign for investors who are thinking about sustainability.
For sure.
It shows that the companies generally do well on those factors.
You know, when we first started talking about semiconductors, it felt kind of abstract to me.
I get that.
But now I really see how directly connected they are to my everyday life.
It's easy to forget about the technology that powers our world.
It is.
But taking the time to understand the companies behind it
Yeah.
and how they work, it can be really insightful.
Absolutely. Not just as investors,
Right.
but as consumers and just people living in this world.
Totally.
Well, we've covered a lot of ground here in part one
We have.
of our deep dive into SOXX.
Lots more to explore.
So be sure to join us for part two,
Yes, please do.
where we'll dive into some additional insights from the fact sheet
More to uncover.
and talk about what the future might hold
The future of semiconductors.
for this really fascinating sector.
For sure. One thing that's interesting is that while SOXX gives you access to a lot of the semiconductor industry, it's very focused on the U.S.
Oh, yeah, that's true.
The fact sheet actually highlights that as a selling point, targeted access to U.S. semiconductor companies.
Yeah, that makes sense. But doesn't that mean SOXX could miss out on growth in other parts of the world?
That's a good point.
The semiconductor industry is global, right? There's got to be companies doing cool stuff outside the U.S. too.
Definitely. There's innovation happening everywhere. But
That's right.
SOXX's focus on U.S. companies does tap into some advantages,
Like what?
like access to capital,
Okay.
a strong legal framework,
Mm-hmm.
and, the U.S. has a long history of innovation in this sector.
Right.
So it depends on your strategy,
Yeah.
whether you want to focus on the U.S. or go more global.
Okay, I see the trade-offs there.
Yeah.
One thing that I keep hearing about is the AI boom.
Oh, yeah.
Everyone's talking about AI.
It's huge.
So how does that play into SOXX's potential?
Well, AI needs a lot of computing power.
It does.
And that means semiconductors.
Okay.
SOXX could be even more relevant now because of AI.
Interesting.
Because a lot of the top holdings, companies like Nvidia and AMD,
Right.
they're the ones developing the chips that power AI.
Those high-performance chips.
Exactly.
Okay.
Think about data centers. Those are the backbone of AI.
Mhm.
They need really powerful semiconductors.
Wow. So investing in SOXX could be a way to kind of ride that AI wave.
It could be, but remember, there are no guarantees.
Right. Of course.
AI is still developing. It's changing all the time.
Yeah, it's hard to predict what's going to happen.
Exactly. But by investing in companies that are leading the way in semiconductors, you're essentially betting on their ability to adapt as AI keeps developing.
That's a cool way to think about it.
Yeah.
It's not just about what's hot right now, but like anticipating the future
Yeah, exactly.
and how these companies fit into that future.
It's about seeing the bigger picture,
Yeah, and understanding those driving forces.
the things that push innovation forward.
Now, while we're thinking long-term, the fact sheet mentions a 10-year average annual return for SOXX.
Right.
It's impressive, but we know the past doesn't always predict the future.
For sure.
So what factors could affect how SOXX performs going forward?
That's a great question, and that's where things get really interesting.
Okay.
We've talked about AI, but there's more,
Like what?
like electric vehicles, for example.
Oh yeah, EVs.
They need more sophisticated chips as well.
Wow, so that's driving demand too.
Exactly, and then there's the Internet of Things,
The Internet of Things, right?
connecting more and more devices,
Uh-huh.
all of which need semiconductors.
So it sounds like SOXX could benefit from those trends too?
It's possible.
I mean, it feels like semiconductors are just going to keep getting more and more important,
It's hard to disagree with that.
no matter what happens in the future.
Yeah, but of course, there are always risks.
Oh yeah, what kinds of risks?
Geopolitical tensions, supply chain disruptions, even just competition within the industry.
Right. Those could all impact how SOXX performs
Definitely. So it's important to stay informed about those things.
and how they might affect semiconductors in general.
Exactly. Got to keep an eye on the big picture.
A good reminder that no investment is risk-free,
No such thing.
even when we're talking about something as essential as semiconductors.
True.
But speaking of staying informed, we talked about SOXX's ESG rating, that AA rating.
Yes,
But the fact sheet goes into a bit more detail.
it does.
It mentions an ESG quality score and a carbon intensity metric.
Right. Those metrics give us a closer look at how the companies in SOXX are doing when it comes to ESG.
Okay.
The ESG quality score looks at things like corporate governance,
Uh-huh.
labor practices, and environmental policies.
So it tells us how they're managing those risks and opportunities.
Exactly. And then the carbon intensity metric.
Yeah. What about that one?
That measures how much greenhouse gas emissions they produce per unit of revenue
So it helps investors understand the environmental footprint.
of their investments. Yeah.
Okay, so even though SOXX isn't specifically a green ETF, it sounds like they are taking sustainability pretty seriously.
They are. It's a good sign for investors who care about those things.
Right, aligning their investments with their values.
Absolutely. But remember, sustainable investing is constantly changing.
Oh yeah, that's true.
New standards and metrics are always coming out.
So it's important for investors to do their own research.
And stay up to date.
Keep learning.
Exactly. It's all part of being an informed and responsible investor.
Couldn't agree more. All right, so we've covered a lot of ground here.
A lot.
We talked about SOXX and how it works, the potential benefits and risks. We even got into the sustainability side of things.
It's been a good discussion.
It has. So what's next on our SOXX deep dive agenda?
Well, there's one more thing from the fact sheet that I think is worth mentioning.
Really? What is it?
It's something that might not be obvious right away,
Okay, I'm intrigued.
but it can have a big impact on your returns.
Okay, lay it on me.
SOXX pays dividends.
Oh yeah, the fact sheet did mention a 12-month trailing yield,
Uh-huh.
but I gotta be honest, I'm not totally clear on how dividends work.
Okay, well, think of dividends as a way for companies to share their profits
Right.
with their shareholders.
Oh, okay.
It's like a little bonus for owning a piece of the company.
A little bonus.
Oh,
Okay.
SOXX, the dividends are paid out every quarter.
Oh, so it's like a regular thing.
It is.
So on top of any growth in SOXX's value, investors could get these dividend payments too.
Exactly.
That sounds pretty good.
It can be a nice perk, especially for investors who are looking for income.
Yeah, for them, it's like a key factor in their decisions.
Makes sense. They want that steady stream.
So how does SOXX's dividend yield compare to other investments?
Well, the dividend yield is basically the annual dividend payments
Okay.
relative to the share price.
Okay.
SOXX's current yield is around 1.2%,
Okay.
which is not that high compared to some other sectors.
So not the highest out there.
Not the highest, but still something to consider.
When you're looking at SOXX's overall potential return.
Exactly. It highlights the importance of looking at everything,
Yeah.
not just the main performance numbers.
All the different ways an investment can generate value.
Right. It's all part of the bigger picture.
This deep dive has been really helpful.
I'm glad.
I feel like I understand semiconductors so much better now
Yeah.
and how SOXX fits into the whole investment landscape.
That's great to hear.
It is. And you know what's really exciting is that we're just scratching the surface here.
Oh, yeah.
The world of semiconductors is always evolving.
Constantly changing, new innovations all the time.
It's fascinating. It's like a deep dive that never ends.
It really is.
Always something new to discover. But for now, We've covered a lot of ground in part 2
We have.
of our SOXX exploration.
Lots to think about.
So join us for part 3,
Yes. Come back.
where we'll put it all together
Strum it all up.
and offer some final thoughts on what this means for you.
And your investment journey.
Exactly. All right, so we've learned what SOXX is, how it works. We've even talked about the potential benefits of the risks involved.
Right.
But what does this all mean for someone who's thinking about actually investing in SOXX?
Well, I think the big takeaway here is that SOXX isn't just about buying a bunch of random stocks.
Okay.
It's about tapping into this huge trend
Yeah.
of how much we rely on semiconductors in every part of our lives.
Yeah, from our phones and computers to cars and healthcare and, like you said, even the infrastructure for AI.
Right. It's hard to imagine a future where semiconductors aren't even more important.
Totally. And SOXX gives you a way to potentially benefit from that growth.
It does.
But we've also talked about the trade-offs, right?
Yes, definitely.
That concentrated focus on U.S. semiconductors can also mean higher volatility.
Right. You're basically tying your investment to how well that specific industry performs.
Yeah, that roller coaster analogy really stuck with me.
It's a good one.
So it sounds like SOXX might be a good fit for someone who understands those risks and is comfortable with that up and down movement.
Yeah.
But maybe not for someone who's looking for something super stable and predictable.
Exactly. It all comes down to your own personal risk tolerance.
Right.
And your financial goals.
Yeah, and that's where those other metrics come in.
Right. The standard deviation, the beta, the PE ratio.
All those things.
They help you figure out if SOXX is actually a good fit for you.
If it aligns with your investment style.
Exactly. And like we said before, being informed also means thinking about your values.
Right.
SOXX has that strong ESG rating.
Yeah.
Which means that the companies are generally doing well when it comes to environmental, social, and governance factors.
And that's important to a lot of investors.
Absolutely. They want to invest in companies that align with their values.
So let's say someone's been listening to all of this and they're really intrigued by SOXX. What's the most important thing for them to do before they actually invest?
Do your own research.
Okay, yeah, that makes sense.
Don't just rely on what you've heard here, or even just the fact sheet.
Right. Dig a little deeper.
Exactly. Learn more about the semiconductor industry.
Yeah.
The companies that SOXX holds. Understand the potential upsides and downsides.
So important.
It's easy to get caught up in the excitement.
It is.
But taking the time to really understand what you're getting into is crucial.
Absolutely. Investing shouldn't feel like gambling.
Right.
It should be a well-thought-out decision.
Based on your own situation, your goals, and how much risk you're comfortable with.
Well said. Well, I think this deep dive has done exactly what it's supposed to do.
What's that?
It's given us a really solid understanding of SOXX,
Yeah.
the whole semiconductor industry, and all the big trends that are shaping this sector.
It's been a great exploration.
It really has, and I hope it's encouraged our listeners to keep learning.
To keep asking questions.
Yeah.
And keep diving deeper into the things that matter to them.
Absolutely. That's what we're all about here on the Deep Dive.
Empowering you with knowledge.
Giving you the tools to navigate this complex world.
And make informed decisions.
So until next time, keep exploring, keep those questions coming, and keep diving deep.
See you next time.